So good morning, my name is Raphael Treguier. I'm the former CEO of Générale, listed office REIT based in Paris. And I recently left the company to set up an investment management company, which will focus in the office conversion into residential unit. I would say residential widely, could be hotel, could be residential unit for like people for you and me. And we're of course at working for institutionals, but we'll also focus on the retail investors. And you may know that not later than yesterday, our lower chamber voted a new law that will dramatically facilitate this type of conversion. So we'll be very happy to discuss further this point during the conference.
Perfect, thank you. Andy. I'm Andy Watson. I've just joined Europa Capital as a partner, and I've set up an office here in Paris. Europa Capital are a London-based investment manager. I've been around for 20 years, have done good business and produced good returns for their investor clients in 19 countries, including here in Paris. But their model has always been London-based and value-add, and uniquely. So I'm changing that in two ways. An office here in Paris, a fully owned one, and a core fund with a long-term horizon. So it's always been value-add short cycles, 2-3 years, and now we have capital from Europa's parent, Mitsubishi Estate from Japan, Arnaud mentioned just now. And Mitsubishi Estate, to give you an idea, when you go to Tokyo, they own most of La Défense, the equivalent district, Marunouchi. All the towers are owned by Mitsubishi Estate. So the rent from that helps seed my fund, and more. So in a way, those two themes are a microcosm of what's going on. So an office in Paris, that's new. France as a hub for doing business around Europe, certain confidence in that. A year ago wouldn't have happened. And then Japanese capital. So actions speak louder than words. It's not just words. I'm here to tell you it's happening.
My name is Alfred Fink. I'm partner at TaylorWessing, heading up the real estate department here in Paris. TaylorWessing is an international law firm with about 30 offices in 20 jurisdictions, so very much spread over Europe and Asia. We are very much looking into Asian investment coming into Europe, but also Europeans going into Asia, particularly into Singapore and Indonesia and into Hong Kong. Here in Paris office, we are 3 partners with about 6 to 8 staff doing international transactions, working a lot with London and Frankfurt, Hamburg, and so forth on global transactions, very much in office, hotel, logistics, and help also out in restructuring from time to time companies we fell a little bit apart. I think that's all.
I'm the general manager of Helaba in France. Helaba is a commercial bank. It's a German bank. It's the holding company related to the savings, the network of the savings banks in Germany. We have 3 business lines: commercial real estate finance, corporate finance, and public finance. In France, our real estate, commercial real estate, the size of our book is about 35 billion, out of a total balance sheet of 160 billion. We are a relatively stable bank, single rated. Our ownership is quite stable, as I mentioned. The size of our book, so like I said, is 36 billion, and France is about 3 billion. The main markets are Germany, England, Scandi, and we opened a branch there 2 years ago, and the US. And our focus is core plus, but we also do value add development and core and even super core. Main asset classes are offices, retail, and logistics.
Olivier. Good morning, I'm Olivier Estève. I'm the Deputy CEO of Covivio, the new name of Foncière des Régions for the last time. And I've been working in the company for 15 years. We are REITs, French REITs, with a unique business model. We are a European player multi-country, multi-asset class. So we are manage 22 billion euro of asset. We are coming from 160 million 15 years ago, so quite impressive development. And we are present in offices, mainly in Italy and France, hotel throughout Europe, and residential in Germany.
Perfect. Paul. Yes, yeah, I'm president of General Continental Investments, which was formed in 1975. Today is a family-led business. Our concentration is on office developments, renovations, particularly within Paris itself, and in the first and even second Couronne around Paris, and primarily new developments, and we normally take all the letting risk. And over the years, we've done about 1.7 million square meters with renowned partners. Our concentration is in Paris. We've also done deals in Lyon and in London. But our principal concentration is Paris as a major capital city, and that's what we like.
Let's maybe just start with you, Andy. Just more broadly on continental Europe and looking at the UK as well. So broader Europe. I mean, we've got low interest rate environment, low bond yields. We've got the Fed meeting today, which is likely to tick up, albeit a small amount, the interest rates in the US. We've got the ECB meeting today, also beginning to withdraw some of the support. That should start happening. How do you see those kinds of broader economic factors influencing investment in Europe and also in France?
There's got to be at least 4 questions in there.
Yes.
So I think the overriding answer goes back to something that Arnaud showed us, which was the gap between the property yields and the bond yields. So actually Arnaud used prime as a benchmark, but perhaps more correctly is the all property yield, which is a couple of 100 points higher. So the gap between the two is 400 plus points. That's good news for real estate. And the view from my house is that there's a gimme in there somewhere. So even if things do tick up with the Fed and with European rates, then it'll take a while until that has an impact on prime yields or other yields.
Okay, and Alfred, in terms of, we've been talking for the last 2 years really about risk of Brexit, which then happened. You've got Trump, you've got all of those things. A lot of things happening at the moment. How do you see risk at the moment? Sudden change with Korea yesterday, who knows what will happen there. Brexit also, nobody quite knows what's happening in the UK, let alone in continental Europe. You've also got Catalonia, Spain, you've got new government coming in Italy. Is this just something that we have to get used to? We've also got Poland, obviously, and various others. Is this something that's impacting on investors when they're looking in as far as you can see? And anybody else can pick that up as well.
If I look simply on my desk, what we are doing today, we get all these questions about, is France still the right safe haven for real estate investments? And I think most of the questions have a little bit come down since the elections of Mr. Macron. And we see at least a Macron effect that these are less important questions for France, because they are simply saying, yes, we see that there's a new management, quote unquote, political management in place, which is managing politics as we have never seen before in France. And there's a kind of a specific trust into that. But I think that we have more or less trouble, politically speaking, with the other countries is certainly something which renders France more attractive. We have also lived through the terrorist attacks, and everybody has accepted that as the new normal, that you can be everywhere in the world and that happens to you. If it's political or religious or whatever, I think we have to live up to new normal. And I think in the different jurisdictions, the attractiveness of countries like Poland is certainly somehow relative, because so the market is only Warsaw, Krakowitz, and so forth, where a little bit of investment is going into. So I think that is certainly a downturn for these countries, but I think it's an advantage for France because much more people are coming, and I see simply that we have a peak in financing, a peak in sale and acquisition, coming particularly from the outside. And if I have the figure right in mind, it was about 46% of Franco-French transactions. And the 2 years before, when I recall properly, it was 66%, something like that. So we are now moving back again to foreigners coming into France doing investments. So that is really a change since last year.
Okay, good. I'm going to dig a bit deeper into the Macron effect in a minute. But Olivier, in terms of you're investing across Europe, how do you see the political risk, or do you see other risks as more important for you, whether that's rising interest rates or?
No, about the political uncertainty, we think that there is two possibilities. Or you are a short-term player and you have to try to anticipate that kind of volatility. But if you are a long-term player, as we are, the most important thing is to identify what are the long-term trends and what are the potentials. So we have decided to invest in the major European cities in the free asset class because we believe on a long-term basis that we can extract value from those portfolios. So for us, the political, we have to be used and to be familiar with this risk. We will face new probably terrorist attacks. I don't hope that, but of course there is this risk. And we see what happens today in Italy. We are really a huge player, a major player in Italy, but for us, Italy is much more Milan, in fact, and for us, the trends and the long-term trends for Milan is really positive. So that's why we don't see, and we don't see another risk. Of course, there is the question of the interest rate, but if our central scenario is a slight increase of the interest rate, but with also an increase of inflation and probably an increase of the rents. So for us, it's not a major issue.
Okay, good. Renaud, just looking a little bit more into the sort of Macron effect. Interestingly, at dinner we were having a discussion last night about if you've got Merkel beginning to be at the end of her political career and Macron being at the beginning, is Macron then going to be the sort of natural leader, European leader, which is not something that would have been discussed about French leaders for quite some time, I think. What's your sense, Renaud, certainly from the UK and from the rest of Europe, when I talk to people who are looking at France from the outside, they do see a very positive Macron effect. How much of that is real and how much of it do you feel here?
Well, I'm not talking about my personal views. I'll be representing those of Helaba. But I think the big picture is more about how much the French people are going to give to Macron, whether it's 5 years or 10. And that's not me speaking. I mean, it's many economists in the marketplace right now who are actually asking that key question. If Macron only has got 5 years, then everything is possible, and then you may actually wonder. I'm not going to say what I hope for. But for Helaba, the French market has become even more strategic, and I think that's the case for all the German banks and German investors and international investors. So going forward, I think there are good opportunities to realize in our home market.
Okay, good. And Raphael, just in terms of the French market, you mentioned a reform that there had been. Just looking at the reforms in general, do you see that as an example of where Macron is going to achieve the reforms that everybody expects? Are there going to be stalls in terms of strikes? What's your sense of it? Do you think that that those reforms are now on the way and they're not going to be able to be stopped?
Of course, yes. Just we have to remind that he's been elected a year ago. It's just amazing, after just 1 year, how many reforms we have been through, and how much he get also the trust from the population, and not only in France, but in Europe. That's really amazing. So I think we should stop talking about our president, because we are here to talk about real estate. But that's true that he went through really a couple of reforms, very important. One of those is the loi Elan we're going to talk about right now, but it's very, very positive. I'm pretty sure he's going to go through other reforms. We are all waiting for, and whatever the strikes there will be, I'm pretty sure we will have the courage to face all those and to go through them.
Okay, great. Andy, you want to pick that up?
Yeah, I would echo what he said. It has only been 1 year, and boy, has a lot happened. Let's remember what we had before. Let's remember that we had a regime that said that finance was the enemy. So we've come from far, and much has been done. And let's remember also that Macron has wrong-footed the Germans, something that hadn't happened for a long time in that relationship. Sorry, Alfred. But what that means is that they never thought that he could do some labour reforms without blood on the streets, and he's done that, and he's about to win through this rail strike. He's taken on the biggest bully in the playground, and is going to win. And the budget deficit is now within proper EU norms, so the Germans didn't expect that either. So going back to your very first question, which is about European leadership, he is a de facto candidate to be the leader of Europe. Where that takes France and its real estate markets, I think is a good place. I think the French people love to be led, feel that they have a leader that they can exalt, and Hollande was a very Mr. Normal president, but they were really missing somebody that they could exalt.
But I think the leadership, I think I would draw a distinction between the thought leadership and leadership in short. And I think he is certainly the thought leader in Europe by now, accepted by the international politics. And he's outspoken, and that's something we haven't seen before. And I think everybody's referring to his speech at the Sorbonne, where he'll outline a little bit how he looks at Europe and what he would like to achieve. And who has done that over the last 10 years? Nobody. I think it's really a kind of thought leadership which is accepted by everybody.
Okay, good. Let's dig down a little bit into some of the real estate factors. So Paul had an interesting look at there on Grand Paris. You've just announced something recently in Saint-Denis. What are you seeing particularly in terms of the market and in offices? How do you see that sector at the moment?
Well, I think the office market is strong. I think rents have begun to move, especially within Paris itself. Over the last year, rents in prime Paris have gone up. And I think that will follow to some extent in the areas around Paris and La Défense, etc. But I don't think you can generalize. I think each area is specific. I think La Défense will be very strong. The south has been strong. The east, because the rents are low, is looking attractive. Saint-Denis. Saint-Denis going forward is, because there's a lot going on there about the Olympic Games and the World Rugby thing in 2023. But that is in 6 years' time. And what is also taking place at the same time is Grand Paris, it's the metros, and this also taking a bit of time, but that will change things. For example, there's the north-south metro line number 14 will have a major effect on the north in an area of Saint-Denis, Pleyel, which had large vacancy rates for a number of years. That would substantially change things. And in the south, going down to Bagneux, that line will have an effect on values. The other line, depending when they'll be done in. I think there's been a delay in them, but there's certainly the idea, and this was Sarkozy who did it, of bringing people in and out of Paris and more quickly, yeah, excuse me, is going to work, I think.
Okay, good. Raphael, just coming to you, you've obviously previously you were looking at office, now you're looking at office in a different way. And how important do you see the Grand Paris as part of your kind of move towards transformation of some of these old office into residential? How do you see that? And are you also looking at transforming some regional office into better class office? Just go through a little bit more about what you're doing and what you're looking for.
Well, I think we have to remind a little bit the background and the history of Paris. Between the 1950 and 1970, we built more than 10 million square meters of office, with some standards which were different as of today. The ceiling height, for example, was closer to 260, 270 at a maximum. Today we need 300, 330 centimeters. So it means that you have a big amount of offices which do not comply with today's standards. Some of them have been already restructured. Nevertheless, talking again about the big numbers, we have to remember that out of the 54 million square meters, you have 45% which are more than 25 years old. So this is for me for the background, and so there's a lot of material that need to be changed, either in new office through a demolishment process, or to be converted in other things like a residential unit and so on. Another point of view is the residential point of view. It's not a well-known sector, but in Paris we have a strong imbalance between the offer and the demand, which support the price in the residential sector for more than 20 years. And today, when you have a flat to sell, you have a long queue in the street. And so it's a super efficient market if you have the right product. And so I think, yes, it totally makes sense today to think that if on the one hand you have all these big users who have a strong preference for grade A building, and so who prefer to wait to have this grade A building before moving, and on the other side you have all these old office assets which need to be restructured or to be transformed into residential units. And so if at some stage this strong decision for all the players, including the political layer, which is very heavy in France, to say yes, we have to facilitate this transformation of this conversion of this office park, this office stock into residential, will provide an answer to two big markets, which are the corporates on one side who want the grade A building, and the people like you and me who just want to have a home in Paris and in the Grand Paris. So if you take the third point of view, which is the Grand Paris project with all this infrastructure, and not only the transportations, but also, and this is the name of the Loi Elan, which is about not only building, but also the planning and the technology. You have to remember that Paris will be, within the next 10 years, the only big world city which is totally connected by fiber. It will dramatically change everything for all of us. It would be about 4G, 5G, and so on. It's 100 times faster. So it will totally change your approach with space, with time, and so for that also I really thank all the Macron's government to have been so pushy. So we'll be the very first to implement such project. Will dramatically change the profile of Paris. So yes, we have some very good take-up over the last 5 years, and I'm not totally agree with Colliers on the approach for the next 5 years, because as a matter of fact, if we succeed in saying that we have to change all this old asset, office asset, and to assume that this should be converted into residential, it will mean that we'll create more room to create grade A, and that will support also the take-up, because all the big corporates are waiting for grade A assets. So I don't know if it will happen over the next 5 years, but to my point of view, the background has never been so good.
Okay, and is this mainly for residential to let or residential to sell?
I would say both markets are super hot in Paris. Okay, again, you want to sell a good flat, you want to rent a good flat, you will have 10 or 50 people against you.
Okay, good. Yes, go ahead. Yeah.
No, I think there's one fact which also must be taken into consideration, that the limitation of density within the city center in Paris. If you have an old office, 3 levels or 4 levels or 5 levels, you cannot say, I do a refurbishment, but I put another 5 levels on top of that. So that is certainly something which most developers would love to do, but they're restricted to do. So the refurbishment becomes very expensive, and the rents you can, even if they are going up, you have to ask for, are not in line with it. So the transformation, as just described by Raphael, is really the only thing where you can potentially, raise some money out of an existing old office space, where you have to do something different. We have the transformation into apartments, we have the transformation into hotels. So that is what we are seeing with the office space, which is difficult to refurbish.
And maybe for you, Olivier, you've obviously got quite a large portfolio in Germany in terms of residential. What's your view on, is residential hot across Europe, or are you specifically targeting Germany because you see a bigger opportunity there than here?
In terms of residential, we definitely are targeting Germany, and when we say Germany, it's mainly Berlin, because we see still room to growth of the value, growth of the demand, and we are still able to source, I would say, a quite interesting portfolio and deal to do our business, creating value on a long-term basis. And here in France, we are not anymore in the residential business because we consider the value are high, and the expected yield are too low for us to do this business in France. And so we do some transformation on our own portfolio, and we have a dedicated team, and we transform, and we have a pipeline of more than 600 million euro of resi, and it's pure transformation of office building to residential, mainly in regional cities, not in Paris, where I would say offices remain for us the very often the best scenario to create value. So that's what we think about this transformation. But I have to say that's what Raphael said, show that now real estate is not only a question of finance and of cycle, but it's also the ability to create the right product at the right place. And it's not the question of the building itself, but also the question of the city around the building, the district. And so we have to be very cautious about the environment, the evolution, and to anticipate that, as Paul did in Saint-Denis, for example, and for sure is the right, I would say, the right look that we have to have on this market. And we try to work closely with the public authorities to manage the development of the city and to be the partner of this development.
Okay, good. Andy, in terms of the core fund that you're producing, traditionally maybe that would have been largely office, retail, with very limited residential. What you're hearing here about residential, does that also change how you're seeing your fund structure from a core point of view?
Absolutely. So having had a previous experience with setting up a core fund in my previous life at LaSalle, the thinking at that time, 2005, was that the backbone of a long-term core fund, strategically, was retail. Because it was hard to replicate. Planning permissions needed an extra layer of socio-political, and consumer spending was strong. So at the time, the IPD style returns were fantastic and had been for 15, 20 years. That's no longer the case. We can debate that for at least another half an hour, but I'll cut that short. Retail is clearly a more fragile place at the moment. So we're taking advantage of our clean page strategically to fill the retail space with residential as a proxy for that, and as a long-term project. Okay, the yields are low to kick off with. Capital values, however, seem in a relatively sensible place in France. That's our take. So that's definitely on the menu for the core fund going forwards.
Okay, good. I'm going to come to retail and logistics and look at those as well. But Renaud, I just wanted to take a moment just to look at the financing side. You know, there was a time 5 years ago when financing took up 40%, 50% of every discussion. What's the position now in terms of France? I know that you're not specifically involved in residential, but in terms of just the general view that you've got on financing, where are we at the moment, and where do we expect to be as the year goes on?
Yeah, sure. By the way, we do resi financing, but in Germany, not in France. I think overall the banks are in good shape, and they have learned a lot from the last crisis in 2008, and also the sovereign crisis of the 2011-2012. So banks are in good shape. Senior banks, I'm talking about. Banks are quite nervous about yields, so they are careful. I'm talking about senior lenders, conservative balance sheet lenders. So on aggregate, the leverage they would be looking at is 55 to 65%, depending on the asset or the risk profile, whether the asset is fully let or is subject to big capex renovations or is empty. And the maturity banks like to do is, they used to be prepared, quite keen to do 10 years and more, but now I think the average market is at about 7. Obviously, again, it depends on the risk profile. There are a bunch of other players, though, in the financing world, as I think everyone here knows. I mean, there are the insurers, there are the debt funds, and there are among the debt funds, there are guys who do senior debt, and there are others who would do junior or mezz. And so with all the discussions or the issues we are aware in relation to value, which are related to rates perspective, there is room at the moment for everyone to have a slice in the financing structure. But so, in short, there is a lot of appetite among banks to lend. The banks overall are in good shape. It's good to deal with your banking partner. And the key question for the banker is deciding where the equilibrium is between rate increase, which I think we all agree, and rental pickup. Because I'm sure we're going to talk about that a bit later. But I think the storyline there, I think you want to be careful.
Okay, good. Paul, Raphael mentioned there about Paris, and we can forget about 3G, 4G. We're going to be 100 times that. As a developer, you're obviously having to look at some of the trends also for office and occupiers and what they're looking for. Is that changing the developments that you're doing, or what should people expect to see? What are you beginning to have to build into your developments now?
No, absolutely, and we should mention this. I think what tenants want today is evolving. Where they want services and they want, meeting rooms. They want a number of things, and new office buildings have to cater to this. If not, they're not replying to the demand. So I think that is an essential point. And also, obviously, you've got people like WeWork and Regus, taking up more and more space. And things are changing. The only thing about Paris is, like most other cities in the world, I think people move to the suburbs, and especially young people want to live and work in the city centre. So in most other cities, people build towers. And in Paris, since the Second World War, they wanted to keep the height restrictions, so towers have not been allowed, apart from Montparnasse. And that's, I think, one of the reasons why we are actually talking about Grand Paris, because Grand Paris, with new metro lines, and there are going to be about 68 of them in the end, you know, are going to bring people in and out of Paris substantially quicker. And that's going to be, you know, make a major change to the location of offices. So you've got the two things going on at once. And there's another thing also happening. You know, I think, in my view, the rents will rise in the next few years. But historically, when they rise, they don't last forever. They last for 3 or 4 years or so on. And they take a bit of a dip. So the Grand Paris is actually going to take longer, apart from things which are essential like the Olympic Games and so on. So I think that things are evolving, and you have another thing, is that building costs are going up. They're going up quite fast, and that's the only thing, which is that some of the older buildings, especially older towers in La Défense, I think some people still quite like them because they're cheap. And if you're developing and with building costs going up and so on, you're going to be more expensive. And so I think that's roughly where we are.
Okay, good. Andy, you also pick that up.
I just wanted to make a technological point. You know, technology is obviously the disruptor of our world at the moment, and particularly in the office sector. An office agent the other day shared with me the idea that in diffusing this wave of train strikes, the ability to work at home or near home has been huge. So it's helped that the strikes are only 2 days out of 5, so everyone's been able to work around that a bit. But the simple ability to do what you couldn't do in 1995 when I first moved here, and we had equivalent strikes, which is to get on your laptop, to get on your phone, that's made a massive difference.
Okay, good. Let's pick up just quickly on some of the other sectors. Retail, Olivier, what are you seeing in terms of that? Obviously, Andy's taking a slightly more negative view on it. Does everybody see across the sectors logistics winning out from retail, or do we think retail is just being too negatively influenced by the news from the US? Anybody can pick that up, but Olivier, have you got a view on that?
We don't do retail as Covivio, so why we don't do retail? Because we consider it's a very complicated asset class. You need a huge skill, huge track record in this area. So and to have also the critical size, and we don't have it. So that's why we do retail with partner when we develop district and so on. But on a long-term basis, for sure, it's today a tricky game because nobody knows what could happen with the behavior of the clients, the behavior of the different brand, and you know that's. I think in the office we see now that people ask for more and more flexibility, and I think it's this move is tremendous in the retail area. So we have to now when I discuss with real estate retail players, they told me that they have to imagine that a building they can change all the shops very quickly at very low cost. So it's more and more difficult, and I think the balance between the end user in retail and the owner, it's not so favorable to the owner today. So that's why we don't.
And in terms of the office side, are you having to look more at mixed use rather than just solely office?
For sure, we look at mixed use, but we consider the mixed use much more at the district level than in the building itself, because in the building it creates extra costs and it's really difficult. It's also less good for liquidity because it's much more difficult to sell a building when there is I would say residential, office, retail in the same building. But sometimes, due to the lack of, I would say, land availability, for example, we develop on Alexanderplatz a major project, and it will be a mixed-use project with retail, offices, residential, co-living, etc. So, but it's not the target to do mixity for mixity. No, it's only when it's necessary. But what is true for the office is that more flexibility, more services, and we have to And so more money to build the right building, because as you mentioned, the building costs are increasing very fast, and especially in France with the perspective of the Olympics game, and we have seen the recent tender we have, that's we have an increase by 15-20% of the building cost. You have a question about hotel or not? Yes. Okay. I'm very happy to buy.
Yeah. No, hotels is good. Let's pick up on some of the others, and I'll come to you, Renaud, as well in a second. Just give me a very brief view on your view on hotels, because you're also doing quite a lot with hotels.
For us, as you may know, we are the first European player in this asset class, with more than 47,000 rooms throughout Europe. And we have launched this activity with the first sale and leaseback of Accor. Now we have more than 10 different players as partner. And what we have been able to do is to set a real partnership with all those guys. And we are building, for example, with Meininger, 5 hotels in Italy, France, Germany. We have a partnership now with Continentale in the UK. What we have seen from the beginning of the year is the RevPAR growth in Europe is plus 4%, and we are sure and we are convinced that this asset class should perform the inflation in the coming years. So we are very confident, and it's also a very, for us, secure asset class. In the past, it was not considered by investors as a major asset class. I think today the world has changed for sure, and we believe in the sustainability of this activity, and the forecasts in Europe are very good, both in terms of tourism and business travel. And sometimes you have good opportunity. For example, with the Brexit, we have been very happy. It was the very positive Brexit effect for us, the opportunity to buy this 1 billion portfolio of 4- and 5-star hotel in the main cities in the UK.
Okay, good. Alfred, in terms of your view on the, I mean, it's interesting because it used to be considered very much an alternative, and now you've got hotels and leisure being seen less alternative along with residential. Are you seeing more capital and more interest in hotels and leisure?
At least from the work we are doing, we have much more hospitality transactions going on since 2-3 years, I would say. I think on the one hand side, it's because there were a move on the political side saying that there was, how to say that, in Paris, where we expect an enormous increase of visitors over the next 5 to 10 years, that there was a lack of 2- and 3-star hotels. Not the 5 stars, which are developing by themselves, but the 3- and 2-star hotels, particularly because they were looking to Latin America and to Asia, where people becoming into a middle class, but we are talking about 1.7, 1.8 billion people. So if we have only 5% moving in that class, there are people who would like to, how to say that, they would like to travel. And I remember European investors who went into China to build something like a Ritz hotel with a little bit around and a kind of a artificial Eiffel Tower, because the Chinese would like to have this kind of experience. And so 5-10 years ago, that was something which was done into China, and nowadays these people have sufficient money to get into Europe. So that is a major change, and not all of them are going to Shangri-La or to the Four Seasons hotels. They are coming here in order to spend their money on Gucci, on Louis Vuitton, and so forth. So it's a different type of how to say, tourist was coming, and that was, from my understanding, one of the reasons why there was a move. And there was also an occasion, because there is a threat to the hotel operators who are from time to time family owned, the small ones. They had to refurbish their hotels to become a hotel which is accessible for disabled people, which does mean a certain amount of investment into access to the hotel, elevators and so forth. And very often they didn't have the money to do that. So there were kind of sale and leaseback, which was very often used, because if the family was a good manager, they tried to keep the business. But there were also people going after that in a more structured way, saying, we will take over not only one hotel, but 5 or 10 in the same region, because there are 40 rooms. And then if I am the 15th quarter in Paris, I have 4 or 5 hotels of that magnitude, and we run it as one. So there were a lot of thought behind it strategically to do things like that. That's one of the reasons I see, at least, why that's happening. And I think now with the Olympic Games, that is even reinforced into that. And I think what Paul was talking about infrastructure and investment into that, I think there's a certain pressure on the public authorities in France to get into terms with that, because there are these two events and they have to deliver in time, because otherwise these events will not be really appreciated. So I think that is quite interesting that is happening at the same time. And so far, I think there's something new coming, and there are more investments going into that, also looking into portfolios, because there are also people like you looking into portfolio deals. And the big hotel groups, chains, get under pressure to get more rooms. So they are competing with Airbnb on room capacity. So they are also under pressure to invest. Overall, there are a number of factors in the market which shows that the investment in hotels has picked up over the last 3 years, and I think will continue in this trend. What I see in retail, which is quite interesting, that people are looking more into an experience than into a shop to buy something. And if you look into the new retail shops, they're talking about an experience, and not I buy a suit or I need some shoes. So they do that like other times. When I was a boy, I went into the cinema, and they go now in a shopping center to be entertained. And so that is a major change, and you have to be adapted to change the entire setting of the shopping center in a very, very short period of time. So it's really becoming complicated and different.
Just teeing off that thought, leisure, which you mentioned earlier, has gone from being the necessary evil 20 years ago, even 10 years ago. So owners and developers, oh God, leisure, we've got to put in a ski slope, it's not going to make any money, swimming pool, oh God. And it's gone from being that to just necessary. So if you can do it on your phone, you can't do leisure with other people in a shopping centre on your phone. And that's a fundamental sea change that technology's brought about.
Yes, and the huge amount of food and beverage that there is now in shopping centres versus several years ago. Has anybody got any questions that they want to ask? I'm going to move to a quick fire format in a second to bring us into the last few minutes. Has anybody got any questions that they want to ask? Yeah, go ahead.
Yeah, probably a question for Arnaud actually, around offices. So we've seen some big trends around flexible office, the need from tenants for flexible office space. So you've got the office group, office first. What's the view in Paris? Is that an increasing trend? And secondly, maybe the second question, can the current stock, can you adjust it to make these flexible office environments, in terms of the planning regulations and the legacy assets?
On the flexibility of the office space, definitely major player, let's say the traditional one, like Regus, now which is Circle. I mean, they bought the Circle like 3 or 4 years ago. We have WeWork that has been really strong in developing in office space in Paris. But we also have main French REITs such as Olivier and Covivio with the new co-working brand and development called Covivio. I think that Olivier could add some
Do you
point.
see the trend increasing?
The trend is increasing. In fact, what we see, depending on the localizations, because mainly WeWork is just the new Regus. It just they just take places in traditional business district. The difference is that in the 80s or 90s in the Paris 8 suburbs, we have new law firms coming from abroad wanting to develop their business in France. Now you have startups from France or from all over the world who wants to change the way they work, and then you have also big corporates who have new expertise and the user experience, the use X, now we call that human experience, that you are looking into retail, you are looking into your office. So it's moving this way. The question being that who is going to be the major actors within the market? Is some French REIT, the landlord, could maybe be the one who's offering flexible office space, rather than to have someone else taking the lead and then selling as a service, the office as a service. So definitely we see that in Paris, but we also see that co-working office space in Lyon, in Marseille, Bordeaux, Toulouse, if there are some projects. And in France, what happens, there's specifically a small office, co-working office space. That's the French, let's say, habit that has been financed by the local authorities. So they are smaller, but meaning that it helps people getting used to that. And then when you speak about 1995, during the strike, it took me 12 hours to go from Bercy to Paris, northern of Paris, in a car. It's like, and now we don't. I mean, it's just unbelievable. You cannot understand that. Just walk on the coffee, on the Starbucks, or take your phone or your PC. So in France, in Paris especially, you have those small co-working space that give the let's say the common people, the individual people, the habits to work not only on the office, and when they join startup or other big companies, they want to work as the same way. And the impact on the buildings, about the cost, which is increasing right now, is the way you're going to put the services, where you're going to put them. And we work now on new ways of working, meaning that you don't have anymore your own office desk. You can work wherever you want within the office building. So it's new management especially for the mid-management. But your office has to be technically fit out to offer air conditioning all over the place, to be able to say, I want to bring the Wi-Fi properly all over the building. So there's also an impact on the way you think an office building.
Well, yeah, I can add one word. We have decided at Covivio level to launch our own offer of pro-working flexible office, Wellio, and definitely there is an increase in the market and the demand for that. You have to have in mind that office is not anymore only a shelter, but it's now for the companies and the corporate a leverage of performance. And everybody knows that there is an increase of freelancers, start-uppers. If you look in the major business school in France, more than a half of the guys who are exiting a business school wants to be entrepreneur, to work in startup. 10 years ago, 90% of those guys are going towards large corporates. So the world is changing for sure. And even on the large corporate side, there is a need of new environment, and because they want to attract those guys, millennial, etc., they want to attract talents, and they have understood that office and real estate, it's a leverage to attract people. And we have, for example, we did the headquarter of OnePoint, it's a digital company, and he discovered that the building itself, it's a tool to attract people and also a tool to attract clients. And for example, he asked, for example, all the steering committee of Renaud for 2 days, 3 days in his own building, working with the team, etc., etc. So that's why we have decided to launch this offer, because it's a question of flexibility, and you have to have all the possibility, offer all the possibility. Classical lease on one hand, and a part of the building with services and flexibility.
Perhaps only to add only the legal angle to that, we have a very strict law with regards to office leases. So the 369 thing is also something, if you can transform that into a kind of a service agreement, is something which is more flexible, and everybody was looking into that. And I think if you look, I was surprised to see that a notary office now took office in WeWork building very close to here. So it's really interesting to see that we have started to make a calculation for ourselves. If you have only the corridor floor, the meeting rooms, which are not each day for 10 hours occupied, if you see what you pay for that, you are perhaps prepared to pay a higher rent for the real office space and to hire simply on demand, on need, the meeting room and all this kind of stuff. So you could get rid of general services in your office and all this kind of stuff. And so far, I think flexibility and paying for what you're looking for is certainly also a kind of a driver behind it. And from the legal side, the very strict 369 rules and the law which is behind that is certainly also a driver behind it, at least for me and for the startups and for foreigners coming to look here. Is it a market for me? Well, I will have an office for a year or two. So, and that is smart on their side to say, I go to WeWork and get perhaps a restricted
To Wellio
space.
now, to Wellio.
Yeah. Sorry, what was the name?
Any others? I've got the last one. Raphael, you want
Let me
to
just add something. Remember what's happened in the hotel sector 10 years ago? There have been some kind of split between the PropCo and the OpCo. And so a lot of big hotel players have sold their walls to people like you and me, or meaning owners. And I see no reason that within the 10, 20 years, it happened the same in the office sector. So that will be very interesting because it will mean that the asset manager, who will be the asset manager? He will work for the owner, or he will work for the tenant? So that's food for thought. But really, we have to think about that. So office as a service, for me, is just the future. It will come. I don't know how fast, but it will come. And second, the fact that the short-term lease is a revolution, frankly, is just a Western point of view. If you go to China, it's 1 year. And believe me, all the big corporates, they stay 10 years, even if the lease is 1 year. And second, if you go also to China, when an owner delivers a building, it's totally empty. There are no curtains, no carpets, no lights. There's nothing. It's just a share. And it's only the tenant who pay for that. So these guys are much ready than us for the future. And so we should have a look at them because they are really writing that will happen. And so there are a lot of things to see. And I'm pretty sure there was in 10, 20 years, if you think that all the Frenchies, the UKs and so on are ready to pay for their own carpets, our relationship, our role in the industry will totally change as an owner.
Good. One quick thing, Andy, because I forgot to ask and I wanted to, which was, is there anything in terms of your trips to Japan that tells you more about what the Japanese capital is actually looking for in terms of product?
So my visits to Tokyo to learn the way they do things over there have been fascinating. Things that I've learned include they like the Olympic Games here because they're having them there. So the whole infrastructure story of Paris is very exciting to my Japanese employers. They like the idea of Paris, something that Paul referenced, as a mega city, as a real world city. So we do business also in Germany and Holland and other places. They're fun targets, but the emotional attraction to my Japanese employers of Paris is not to be underestimated. They feel very at home in a city with 54 million square meters of stock. I think Tokyo's got a slightly bigger one, but all of that resonates with them. And then perhaps the last one is the relative transparency of the Paris office market in particular. That really appeals.
Okay, great. We're about to be out of time, and I want to leave some time also for teas and coffees and for you to be able to talk to everybody afterwards as well. So I've got one last question, which I always ask at these to try and force people in order to tell us where we should invest. Olivier, starting with you, what do you think the smartest investment is going to be? You can be Europe or you can be France, you can choose.
For us, it's the main region, the main European cities. We don't look at the countries anymore. We look at the cities. So that's what. And Berlin for sure is probably one of the best places to invest for the next couple of years.
Okay, Renaud.
Office in Paris and logistics in key cities. We haven't spoken much about logistics today, but I think France is at a crossing road to make it successful. And in relation to offices, have an open mindset because we've spoken a bit about technology, but I was talking to a client very recently who is looking at an asset a bit far from public transportation. And then the common answer is, well, I have the navette, the shuttles, and I don't know about users here in the room, but I have been a user. I've had a various life in my professional career. And I tell you, taking a navette or walking 10 minutes from the train station, whether it's in England or in Germany or France, I've done all. When it's raining, it's not fun. But the answer to that is automated shuttles. And even when we have a set of Google cars, I'm not an investor, but guys like you, Olivier, who are in the market, or Raphael, or Andy, I think this is going to be a major game changer in the industry in relation also to all what you mentioned, Raphael. So I think it's a fantastic time to do real estate in offices in Paris, and I have no share in the business, except for lending.
To keep it short, I think what Raphael is doing, I think, is very interesting. I think the transformation of old offices into something more attractive, like apartments, homes, and I think also about these local hubs for logistics in the city, the last kilometer, where people have to stock at least a book and the PC and whatever it might be to be in the position to deliver within 1 hour within the city what they promise on the internet. I think is certainly also a kind of pickup which has to be done.
2 picks. The first of them, because secure income is our story in the new fund, and secure income which we can grow, I'm going to go for Paris offices. I think that the position in the cycle remains good. The macro effect is for real. And the second, underpinned also by infrastructure, is residential in Bordeaux. So if anyone in the room has any ideas, please give me a call.
That's not just for you. It's not a house for you in Bordeaux. Raphael.
Well, for me, the keywords will be conversion, of course, but not only office into residential, but for example, parkings into logistic unit for the last kilometer, and anything we can transform our premises into more efficient premises. There are a lot of things to do in this area, and you know how far the financial equation is super tight for the logisticians for the last kilometer, and typically in this segment, there are a lot of things to do in Paris with all these empty parkings during the light day.